a quick introduction, and like I said, a thank you to the Scottish Nature Finance Pioneers for hosting us. We're all here to talk about the first ever crowdfund that is aiming to take nature recovery to scale in Scotland, looking to engage citizen rewilders and locals, but also high net worth individuals and institutions to try and draw investment into nature recovery. There are a lot of eyes on this project, and particularly with the COP15 conference that has been going on and concluded yesterday, I think it's a really pertinent time to be having this conversation. So I will hand over to Jeremy to tell you a little bit more about our project, and then we'll have some open question and answers, and do feel free to pop your hand up with the hand function, or just wave at the camera, or of course type into the chat function, and we'll go through everyone's questions. We'll finish up if they're at 2 or before, but if there are lots of questions, I'm sure there'll be scope to answer some after as well. So there you go. Thank you, Jeremy.
Thanks, Frances, and sorry for my technical inabilities, guys. Thank you for coming to the meeting. Just briefly, because I'm sure the Q&A is much more interesting for people. Highlands Rewilding has the purpose of nature recovery and community prosperity through helping take rewilding to scale in Scotland. So the and community prosperity piece includes part of our model where we have we're shooting for mass co-ownership, and that's what this crowdfunding is about. It's a way for, shall we say, citizen rewilders to co-own pretty much everything we're doing, and on the same basis as any large financial institution. We currently only have one large financial institution as a founding funder, but we're hopeful that hopefully there will be more. All of us know we have to bring the financial services industry to the nature recovery mission, or else we're never going to hit these ambitious Scottish government targets. So that's what we're about, and we're going to try and help scale rewilding vertically by acquiring more land of the kind we have at Bunloit and Beldorney, and horizontally by offering a sort of win-win service or set of services to other landowners based on our scientific and data acquisition and processing abilities. And we've been very lucky to get a terrific science team gravitating to the project, and Penelope and Kathy, I can see, are on screen, can answer any questions about our second natural capital report, which has just come out with a supporting statement from the biodiversity minister. And anyone who invests in the crowdfunding will co-own all of this, and that's, I think, so at the moment it's a unique model. I'm sure it might get copied, but it is, I mean, if we're successful. But at the moment it's looking encouraging. The crowdfunding, I think we're at, last I looked, 54% of our target, and we're not yet 3 weeks into the campaign, which is 12 weeks, well, actually a bit more than 12 weeks long, till the end of February. And in parallel, we're fundraising again with family offices, high net worth individuals, financial institutions, if we can persuade them to come to the party at this stage, in sort of what the share in company who's doing the crowdfunding platform for us calls an off campaign part of the fundraising. And then we're also hoping to leverage the equity with debt and bring a bank to the game for the first time. As I'm sure everyone here will know, there's no bank as yet loaned a penny to a commercial nature recovery outfit, and we hope to be the first to break that logjam. So there we are. That's it. How's that for an overview? And obviously very happy to answer any questions, except the difficult ones, which my colleagues can answer.
Fabulous. Thank you very much. Does anyone have any to start us off?
Just some very basics. How much are you looking to crowdfund? Are there different levels of engagement or donation, and not donation, investment that you're happy to receive? And what do people get back from it? I know you said about citizen rewilders, but
yeah, so the spread of investments, we've taken it down as low as we can, which is the bottom level at which the platform, the Financial Conduct Authority's certified platform sharing can operate at. So that's £50. There's still a lot of money for, you know, people in a cost of living crisis, but it's as low as we can go. And, you know, hopefully people can join together if they to do that. Loads of people are investing at the £50 level, but the biggest investment so far, I think, is £50,000. So, you know, there's quite a spread of interest, but all the shares are of the same kind. And for all of them, we're hell-bent, you know, we're going to bust a gut to provide an annualized rate of return of a minimum of 5% over the 10 years. No guarantees, of course. You all know there are lots of uncertainties, not least biodiversity policy, but we're going to really do everything we can. And it's vital that we do, because the whole experiment will have failed if we don't get an ethical level of profitability, because then we won't be in a position to, you know, help persuade other landowners who perhaps aren't as worried about nature recovery as we all are on this call, to change their land management practices. Oh, the other point to make is that it's open-ended. The target is 500,000 for the crowdfunding, but if it goes over the target in our dreams, we won't stop, because we'll see how far it can go, because it's kind of modular, the model. The more we raise, the more we will be able to look at buying other tracts of land for rewilding purposes, and the more we'll be able to put resources into helping other landowners on a win-win basis to, you know, come along with us, all of us.
What I've done also is post a link to our crowdfunding webpage, where we've also got an offer document in there with quite a lot of details to have a look at after this webinar.
I'm happy to ask a question. Yeah, so I just wanted to ask Jeremy about the kind of the community engagement piece, because I saw that you've been kind of interacting with people on Twitter on that kind of stuff quite a bit. It's nice to hear a bit more about what Highland Rewilding have been doing in that part. And then there's a kind of further question: is there like potential for a revenue sharing model with the community, or is that kind of something that maybe is a bit far off at the moment?
Well, the thing we want to try first is the shares, the ownership sharing, and that's you know, the kickoff point. We do have people signing up from the local communities at Bunloit, at Beldorney. We haven't yet reached out to them comprehensively, and we will. There will be mail shots going to everyone in these communities in the new year. But we've done loads of conferring of different types already. And, you know, a lot of it's what you would expect. A lot of the feedback from that is really quite supportive. I would say we have a clear majority of support in both communities. And some things are going really well, like here at Bunloit, the local high school, the Glen Urquhart High School, uses the place like an open-air classroom now. And we've had great reports from the students, the parents and the teachers. And we've hired our first apprentice ranger out of that group of students who've been up here. So we're doing lots of stuff like that. We are familiar with the revenue sharing model. We did that at Solar Century. We gifted 5% of our profits actually not to local communities local to us, to communities in Africa. So 5% of the profits went to Solar Aid, this charity that we set up off company, and that was a lovely story. There's a lot you can do to set up little micro solar companies in Africa that massively transform it. So we know all about that and how to do it. It's just that we want to try this model first and see how many people can become co-owners. And then the other angle is the way that the project unfolds. And the Scottish Land Commission has said to us, they've been really helpful, and they say, you're not perfect. We want community buyouts is what we really want. But since you have a different model, it's much more part of the solution than it is part of the problem. That's their words. And we're hoping that you'll be setting up joint venture companies with community entities as you go. And that's a terrific idea. So, theme-specific companies where 50% is owned by Highlands Rewilding and we put in money, and 50% is owned by the community. For example, in aspects of horticulture or renewable energy, things like that. So this is the model that we want to try. But ultimately, if we are successful and the nature recovery industry does become profitable, we can always look at the profit sharing model down the track as an alternative or an addition even.
Brilliant, thank you very much. Just to, if I may, on the joint venture piece, would that involve that would need the community to own the land, if you like? It can be.
Yeah, that's right. So if there, for example, were a willingness in the community or a desire in the community to have affordable housing, and say a cooperative were set up in the community and all they needed was land, we would sell land to people to do their self-building and making home building affordable that way, because provided there's some sort of covenant about low emissions and everything else, and not turning the place into a theme park, but kind of sharing the objectives of the company and the purpose of the company, then hey, what's not to like about being able to provide land for community building?
Brilliant, thanks so much.
There was a question in the chat about the expected return on investment. I've popped a very short answer in there and would definitely direct people towards the crowdfunding website with all of the appropriate risk warnings in place. But perhaps, Jeremy, you could chat a little bit about the plan going forward to reach that.
Yeah, so it's 5% minimum. That's what we're telling everybody, and for many people that would be fine. That would be viewed as success. I mean, we will try to get it above 5% because that's the way you meet payroll, keep employing people, do all the things that you want to do going forward to scale nature recovery. And one of the ways we're hoping to be able to do that is via the rewilding service, if you like, the nature recovery service offering to other landowners. In the business plan, you can see the numbers in the business plan in the offer document. We make really conservative assumptions about how many landowners kind of join in with this process. But if we hit an updraft and people say, hey, looks as though your growing team is going to be able to do all this and take a lot of pain away from us. It's not something we naturally do ourselves as landowners. You can do it for us on a win-win basis. Then we could get to north of 5%, but we're not, potentially well north of 5%, but we're not majoring on that because we want to under-promise and over-deliver. And also, we don't want to attract the attention of venture capitalists. We don't want venture capitalists anywhere near this endeavor. Some of us have long experience of venture capitalists, and any of you contemplating setting up companies, steer clear is our advice. More hands there.
Oh, sorry, I was on mute. Abir, would you like to ask yours? I can see your hand is up.
Yes. First of all, thank you very much for this amazing conversation. I think you answered my question about the venture capitalists, because if you try to make a business that will involve venture capital firms or private equity firms, it will go straight away to the return on investment and the actual return, and they have to achieve more to give others, etc. But can you explain, or can you discriminate yourself comparing with others by saying that your business is more focused on social, and any return you will achieve, it's called social return on investment, rather than kind of normal return on investment, just to kind of make a niche for yourself and discriminate your business comparing with others? Thank you.
Yeah. We have to get a balance in this model. There are shareholders in there who will be, really interested in us making a decent return, and they wouldn't sign up if 5% wasn't enough for them, but they will be looking for us to try to get above 5%. So we have to behave like a proper, a progressive company, if that's not an oxymoron. On the one hand, but on the other hand, we're weaving the community centricity into the fabric of the model as much as we can. So as I always say, it's not a perfect model. I mean, if I lived in Langham and I was a member of that community buyout and actively involved in the wonderful work they're doing there, I would be very happy. But it's, this is a model of enlightened capitalism that we're trying. Again, if enlightened capitalism is not an oxymoron as well.
Thank you.
Callum,
I think
oh, sorry, go on.
Just to make an extra point there, I mean, two other points. The first is that obviously we want to do everything we can to keep the carbon we save out of the atmosphere forever, and the biodiversity that we create properly saved. So, traditional models where if the venture capitalists were involved and owned the whole thing, they'd be forcing you to work really hard for 3 years, and then they'd sell it all off and conceivably sell it off to the Donald Trump Woodland Golfing Corporation. That's how it works. That's not what we're about. So we've got a governance structure that is dedicated to propagating itself over time, to do everything we can to keep carbon out of the atmosphere and biodiversity gained. And at the same time, in order to do that at scale, we know we need lots of working capital from private sources. I mean, the Green Finance Institute says £20 billion of working capital investment over the next 10 years. Hopefully it's not as much as that, but that's what they say. And we barely started on that as a group, as an embryonic industry. So we have to do things that aren't going to make it impossible for the folk who have that kind of money to invest. And if we tell them we're about keeping carbon out of the atmosphere and biodiversity gained, then that's okay, because they have stakeholder, we're finding, because they have stakeholder pressures of their own. But it does mean that we're targeting a quite narrow spectrum currently of the financial services industry.
Thank you. Thank you so much.
Callum, I can see your hand is up.
Hi, thanks. Yeah, a follow-up question for Jeremy on the income side. So I'm just kind of wondering where you think the income's coming from. I mean, obviously, you've got your sights set on a particular estate, so I'm kind of wondering where you think the income is going to come from that's not going to damage the rewilding aspects, and also if you were to go on buy more land, would you still have that 5% income sort of annual income target, even though you might not know what the potential of the land could be? So digging a little bit more into detail there.
Yeah, sure. Well, we wouldn't buy other tracts of land if we didn't think it had this 5% income generation potential. But in the model at the moment, our best guess, and of course, in the absence of biodiversity policy, it essentially has to be a guess, an educated guess, is that about a quarter of our revenues will come from natural capital uplifts, mostly biodiversity, also carbon. But then we've got a huge slug, more than half, just over half of the revenues coming from the platform service that we provide for other landowners. And so there are big assumptions in here. This is why it's ultimately a punt on a frontier. And then the other quarter are all the other things you would expect that have nothing to do with, well, no, that's not true. They do, that aren't directly related to natural capital. So regenerative agriculture, eco-building, ecotourism, all the sorts of things that we know can happen on estates where you're lucky enough to have beautiful scenery and nature recovery. And some of those can be scaled up if the market is late in developing, if the Scottish government, is slower to get the policy furniture in place. But personally, I'm very bullish about this. I think we're lucky in Scotland. All my dealings with politicians and civil servants suggest to me that there's a critical mass of talented people who are intent on delivering these targets. And, we all have to help them. Yeah, really, that's what it's about. So is there risk? Yes, of course. But governments don't always do what they say they're going to do, and companies don't. But, you have to proceed in good faith. And I'll tell you the other thing that is really encouraging to us, and here I can speak for quite a bit of the part of the team that has come with me to this adventure from Solar Century. So we were here, for those of you who don't know, we were working for a big solar company before that I founded 20 years ago. And so we've been through one of these revolutions and the emergence of a totally new industry that is vital to a livable future. And that was solar energy and displacing fossil fuels. So we rode that wave in Solar Century. And a lot of what's happening at the moment feels very like those days, where just before it all took off, you can smell what's coming. And I think it's the same in nature, in the embryonic nature recovery industry. It's just around the corner. This is going to take off. And as you all know, that's not an out to lunch view. Most people think that, even the estate agents, which is why they're increasingly selling land based on natural capital potential rather than, sporting, shooting potential.
Matthew.
Yeah, could I just ask some questions on the revenue calculations you got there? So obviously you mentioned about the services being kind of like the big revenue generator, but would you be profitable without that? So they say that kind of doesn't happen. It's just the biodiversity and the carbon revenues.
It is possible, just about, if we plug slightly less conservative numbers into ecotourism and those other non-natural capital revenue lines. And if the loan from the bank goes ahead, which we're very optimistic, and we have reason to be optimistic that it will, their calculations are based entirely on the assumption that we make zero revenue from natural capital. So they're discounting the possibility that we'll ever have any rewards for natural capital uplifts. So it's all being done on the ability to service the debt from those non-natural capital revenue streams. So that's the answer, and it won't be fulfilling the purpose of the company. It won't, you know, it will be a nice company, doing ecotourism and everything else, providing decent jobs for people, but it will not be helping deal with the existential crises of our time.
Super, thank you.
Ed, I can see your hand up.
Yeah, Jeremy, can you tell us a little bit more about the services that you are offering to your neighbouring landowners?
Well, it's a full service. We're saying to them, look, we know how to do this baselining. We've done it ourselves on the ground. We are doing it ourselves on the ground. We'll come in and we'll do that for you. And then based on that baselining, we'll make recommendations for the land management changes, and we'll project manage the land management changes. Then we'll measure again before we go to market. In the current model, we're waiting 5 years before we bring anything to the market, either ours or clients' natural capital, and then we'll sell on the market, by which time hopefully prices will be higher, and then we'll share the revenues in a win-win way, percentages to be determined. So that's what we're discussing with landowners at the moment. And there are a good few landowners who are sort of taking the view that, crikey, we know this change is coming, but it's not something we know anything about. We don't really know how to do it. And if you're genuine and can take the pain away, then let's have a shot at it. And the other thing we will do in the current model is we'll finance that for them. So many landowners, as you would probably be aware, are what they would call asset rich, cash poor. So they don't have much capital to deploy in teeing all this up. Therefore, if we can do all that for them as well and act as a kind of bank, proxy bank, then why wouldn't they want to share the revenues with us? So that's the model. And we will be pushing that boat out in 2023, seeing how far it can go and who is interested in joining with us as pioneering clients, and taking an interest beyond just the pure business of it to this is pioneering stuff on a frontier that's very important. And so hopefully we will identify some landowners who are very aware of that angle to what we're doing as well.
I'm sorry, I would have liked to have read more of the information before this meeting, actually. So I'm sorry, kind of asking basic questions. Okay. So the 500,000 that you're looking to raise, what are you looking to spend that on?
Well, it would go into the pot to be determined. You'll be able to see, the general spread of revenue assumptions and cost assumptions going forward. So it will help meet both the cost assumptions and the and the capital expenditure for any additional tracts of land that we might be lucky enough to purchase. I should emphasize that we're obviously £500,000 sounds like a lot, but with the high net worths and private and foundations and family offices, we raised £7.6 million last time from 50 of those founding funders, and we'll be very disappointed if we can't repeat that performance there. So the crowdfunding at the moment would, in that view, would be a minority, but it's incredibly important in terms of the model because of the co-ownership and the way it's a way for citizen rewilders to own stuff, not just contribute membership to NGOs or whatever, to co-own stuff And you might say, okay, well, they won't be on the board, they won't be determining how the money's spent, but they can do everything. They can do lots to influence the board, and we have a board, a governance structure that will be a very listening structure, and it's manifestly rooted in the interests of rural Scotland. It has 2 board directors who are on the faculty at Scotland's Rural College, for example. So, you know, we're going to try our level best to be a proper progressive company going forward.
Okay. So those investments, are they locked in for a 10-year period?
We will be trying very hard to provide secondary markets for the investors so that people will have liquidity opportunities before the 10 years. Again, no promises, but that would be an incredible asset if we could do that, because if people have a sense that liquidity would be possible in less than 10 years, it will appeal to more, you know, the proposition will appeal to more people than would otherwise be the case. And also there are the stock exchanges, the big stock exchanges are looking at, and in fact that the FTSE has set up a vehicle for floating natural capital entities on the stock exchange, and we would look at that as well, obviously only for a minority of the company, well under 50%, but we could provide liquidity that way. And then the other thing we'll be trying to do is, if we're successful, especially towards the end of the 10-year period, is the question of dividends. So you know, returning cash to shareholders by dint of dividends based on overperforming on the profit and loss account.
So the 5% return that you're looking at, is that an sort of on an annual basis, or will the returns only come in where there's a liquidity event?
Annualized. So yes, and so over the 10-year period, your average would be 5%, and obviously most of that's coming at the tail end. We will be losing money, and this is why it's a patient investment. It's if you invest, you've got to be in for the long haul, longish haul, and that of course puts a lot of investors off.
So return is just at liquidity events.
Yeah. Unless we pay dividends, of course, then that's instant cash, but not before the back end of the 10 years, I think.
Yeah.
Unless we're very lucky.
I think we might have covered something similar, but there was a question in the chat. What are the primary revenue generating activities? I think we did cover that, but perhaps a quick run through or proportions perhaps.
Yeah, 51% from the platform service, which is natural capital based, of course, and then just under a quarter from natural capital credits, both biodiversity uplift credits, yet to be defined how they will be measured, and everything else. The government are working hard on it. And of course, carbon credits through the various carbon codes. Then the other quarter are the various stacked revenue streams involving ecotourism, eco-building, regenerative agriculture, forestry. What have I missed? You know, one or two, renewable, micro renewable energy, and those kinds of things that we can do on these estates.
And again, I will just add to that, do have a look at the offer document for the real minutiae and details in this. It is all laid out in there, and you can obviously always get in touch over email as well, and we'll give a real rundown. Julie, I can see your hand is up.
Yes, thanks. So I'm about 10 years away from officially retiring, maybe a wee bit more. I would like to be able to use my pension fund to create something that's actually going to be meaningful in a world that I want to live in that same of time frame, and I'm wondering if you've been speaking to any pension investors.
Yeah, we are. You can imagine I've been around quite a long time, since roughly the Pleistocene, and so I've got quite a lot of experience of talking to financial institutions, and we've been doing quite a lot of that as well in this. I have to say I'm cautiously encouraged. I think they will come to the party. I mean, that's what happened with solar. There was a phase that they were in when they were looking at each other, looking at the opportunities, you know, when it became possible to believe that, hey, this crazy solar technology actually could become something really significant. Maybe they didn't think through exactly what happened, which is that, as you will know, it became the least expensive form of energy on the planet as of today. And they were looking at each other and sort of thinking, who's going to go first? You know, and there was this kind of period of when none of them were going, and it all depended on angel investors and people, prescient people. But they did jump, and then it all took off like crazy, exponentially, the global industry and Solar Century as well, riding on the back of it. So I really do believe that's going to happen again. But whether, if you tell me what your pension fund is, I don't, you know, I wouldn't like to guess which one will go first. I'm thrilled that we have one big fund, MFS Investment Management, that's put a toe in the water with us. They did that in the first round, and they've invested again in the second round, which is deeply encouraging for us because it means they're happy campers. They're pleased with progress. And so I'm hoping other financial institutions, including, you know, potentially your pension fund, will look at this and say, you know what, we really should be taking a position in this. It's so attractive, this embryonic industry. Let's do it. And of course, I never miss an opportunity to say to these guys, you know, you talk about risk and you say there's too much risk because the government hasn't come up with a biodiversity policy. You know, the biggest risk that you face going forward, we all have to keep telling them this, the biggest risk you face going forward is that you won't have a viable world in which to invest a damn thing. That's the biggest risk, unless, you know, industry is vital to a livable future, take off like Topsy. So it's a sort of potentially deathly catch-22, and it's possible to be a bit, you know, downcast about it. But actually, like I say, we've seen it before with solar, it can happen again.
Matthew, go ahead.
Yeah, sorry for hogging a bit, but have you seen much competition from major investors? I saw like Aviva have kind of joined with someone to invest in land in West Aberdeen, and is that kind of a risk?
Yeah, and Standard Life, yeah. I mean, this is the green. Let's not mince our words. This is the green layered thing, right?
Yeah.
And yeah, whenever I talk to folk like that, I say I don't think that's the best way to go about it. I think that you're just annoying people, and you just need to talk to some Scots and listen to what they say. So we're trying to provide an alternative to that. And it's encouraging that people, I can stick my hand on my heart and say, people in other financial institutions that haven't bought up large tracts of Scotland in their own right and tried to manage it from London, sitting in desks wearing suits and offshoring all the profits, you know, really not a great model. The folk who are looking for alternatives are saying to us, we like your model because it gives us a degree of social license. I mean, we maybe stick out, if we invest, we maybe stick out features of the cap table, as investors say, i.e. owning lots of shares, but they will be shares of exactly the same type as, you know, small investors investing their pocket money, you know, and they're all co-owners. And of course, if you're a cynic about it, you'd say, well, that's ridiculous. You know, the big funds will call the shots. Actually, we've hard baked into the model a mechanism to ensure that doesn't happen, and that's called the board, the existing board. And there's nobody from a big company on that board.
Is there anyone else with their hands up or waiting? I mean, we've talked a lot about natural capital baselining and the potential for a biodiversity uplift. We've not mentioned much our own report, and I wondered perhaps it might be good to have a brief introduction to that and how it fits in with this potential uplift, how we might feed into that.
Can I chuck that ball to Penelope, who was in the team who wrote it? I merely read it. I didn't write it.
Yes, of course. So the natural capital report is available on our website for anyone who's interested in having a more detailed look. But the focus of that report is going through the baselining work that we've done on our second estate, broadening. So this runs through all the carbon and biodiversity baselining work that we've done and the different methods we've used to try and quantify the carbon and the biodiversity on this estate. And we're using all these data that we've gathered to hopefully input into the development of a sort of biodiversity, or one or more biodiversity metrics. And so, yeah, the biodiversity work covers a sort of broader sample of different methods as possible. So from DNA sampling to more broadly looking at habitats, breeding bird surveys, and trying more technological methods like acoustic monitoring, and see how they can complement each other to find the best sort of measure possible. And hopefully we'll be able to pass this knowledge on to other landowners interested in the best way to sort of baseline their estate and to quantify what they have at the moment and then how this can potentially be uplifted. And we're sort of collaborating with as many experts as possible on this to find out the best ways that we can then use this knowledge to uplift. So things like all the data we've now got on invertebrates, for example, what this actually means, and how we can promote the sort of more rarer species or generally uplift the biodiversity on the estate. But yeah, all the information is there in the report if you're interested in more details. We're happy to answer any specific questions now if anyone has any.
Yeah, Penelope, where you're baselining on different bits of land, if you've got an area of land that is already very well managed and has, you know, high levels of biodiversity, high levels of carbon soil content, are you finding a way to leverage revenue from these areas for their intrinsic benefits as they stand? Or is the value being based purely on the level of uplift that is possible or available? So I guess another way of asking that question is there a reward there for landowners who are already managing their land in a nature positive way? Or is there really only gain to be had from where you've got very low levels of biodiversity where you can achieve a lot more?
We're having conversations with people because there's definitely something in, you know, will there be any credits in maintaining an area as it is and not letting it be developed, for example? Surely that should also have some sort of credit to it. But these are early days for this. But we are finding one of our estates, Bunloit, on the shores of Loch Ness, is at first glance, it's a lovely place. It's biodiverse already. It has many, many different habitats. But there are certainly ways that we can uplift here. There are some blocks of coniferous plantation, and surprisingly, areas not as diverse as we thought at first. look, and given this state of the UK as a whole, the nature depleted states and the complete lack of any pristine environments, I think there always will be a way to uplift areas, but we're certainly having conversations on maintaining areas and not letting them degrade further. But this is, as Jeremy was saying earlier, it's very, very early days for this biodiversity credit system, so we'll see what comes out of this.
Yeah, I suppose there's always room for improvement.
Yes, exactly. Yeah,
and those revenue costs, I suppose, for maintaining landscapes in a certain degree of health can be built into the model.
Exactly. Yep. So we're sort of quantifying everything as much as possible, land management techniques and surveying techniques, and trying to sort of home in on the most cost-effective methods possible, for monitoring and managing.
Because I think it's an interesting challenge, isn't it? I work with some landowners who have been farming their land with regenerative practices for years and years because that's the way they want to do it. Potentially have less to gain than their neighbour who's pouring liquid fertilizers all over it for years and years, and the soil's completely depleted.
Exactly. Yeah, and you wouldn't want
interesting discussion around how we achieve parity there.
Exactly, because you wouldn't want people who are already doing good work to lose out in this situation, and certainly wouldn't want discouragement for those management practices. So yeah, that's a good point.
I have popped the Natural Capital Reports link where you can find both of the reports, one for Bunloit and one for Beldorney this year and last year. So do have a read, it is well worth it. Do we have any more questions about that or any of the other topics we've been discussing?
Let's have one last one, if you don't mind. Just on the assumptions on the biodiversity credits. On the kind of the revenue that they're going to generate. I just wondered if I've seen the numbers in the offer document, but just where you got those from, because you said there's no kind of BNG at the moment, as it were in Scotland.
We couldn't find any specific Scottish data or schemes to use, so we stole something from DEFRA that they were using a couple of years ago, and we used those numbers literally by dint of not really having anything else to hand. They were being used in modeling of the ELMS system, and we took the conservative end of the range of numbers, and so that's what we plugged in to give us the data that's spat out. And we did a sense check on it, as you may see in there. We sort of looked at average agricultural returns from land and checked that we weren't too far above those with the assumptions we'd made. And of course, we want to be a bit above them because or else how are we going to persuade traditional landowners and farmers to change, but not too far above. And so we passed that sense check as well. But, will that be anything like the ultimate outcome of the policy regime? I don't think it has a snowball's chance in hell of being in that frame. But it's the best that can be done in the current circumstances, and it's ballpark right. That's the I think that's the important thing.
Right. Thanks.
I think we are coming towards the end of this session. I will pop a link to our email address, info@Highlands Rewilding. rewilding.co.uk. So please do get in touch if you have any more questions. This webinar has also been recorded and will be shared across the network, so you will have access to it. I can see we've got one more question from Ed. Go ahead.
Yeah, I'm sorry I didn't know more about Highlands Rewilding before this meeting, and I will go away and find out more about you. I think this is really exciting work that you guys are developing here. A question around agricultural land for you. So it's Highlands Rewilding, but on the agricultural side, are you looking to maintain agricultural productivity as well, and to do that in such a way as it's more regenerative and nature positive, or are you looking to take land out of food production and move it into sort of more intrinsic wildlife value?
Well, it depends what you mean by food production. We have regenerative agriculture built into the fabric of what we're doing. If you look at the model for Beldorney, it's 80% grassland. So there's loads of stuff we're doing there, and the wonderful work that Nikki and James on our team are doing with rotational grazing is already showing signs of increasing species richness in grassland. And well, we don't have any data on carbon yet, but you walk around and look at the soil where the cows are temporarily grazing, and you can't believe that there isn't more carbon going down into those soils than when it was grazed to within an inch of its life by sheep. So stand by for hopefully for exciting data on all that. And the community prosperity part of our purpose, it requires that we produce food on this land that is undergoing nature recovery, and that's part of the actual process of nature recovery if you do it right, regeneratively and so on. So we will very much be players in that going forward, and we've already had one little everyone on this call will realize that there is no operating manual for rewilding. There are lots of debates as to how best we achieve nature recovery. And we had a good old debate within our science team and woodland team of a sort of grassland versus planting type, where we were doing some planting in our efforts to regenerate and replant the traditional woodlands that we have in the Deveron Valley, and we found we were doing it within an area of already high species richness in the grassland. So we've had to, the grass has won over the woodland there, kind of thing. So we're right in the frontier, making the best choices we can as we go.
Brilliant, great work. Thanks very much.
Thank you.
Wen, hi.
Hi, thanks very much for the interesting questions and answers. I was just wondering, Jeremy, if you could comment on what made it successful in terms of securing the funding from MFS Investment Management, and whether there was sort of any difficulties in securing funding from any other private institutions, or
Well, it's never easy. You just have to find people in the right frame of mind who understand or agree with you that there are all these potential upsides, but who also recognize the risk and say, it's worth it because this has to happen anyway, and we know that angel investors of different types, be they family offices or whatever, are essential to kicking off these kinds of embryonic industries. So you just have to cast a lot of lines into the water, and some of them end up with fish on the end. And then the most important thing of all, and where we've been really fortunate, is you need the first investors to have a good experience and be going out and saying to others in their peer groups, you know what, these guys are really doing good stuff and we're happy. And that we've been very lucky to get that. So of the 50 founding funders, 24 have been up to visit and see what's happening on the ground. And I can honestly say they've all gone away happy campers. And the ones who haven't visited are still, you know, content with progress. Most of the founding funders are reinvesting, and that tells new investors everything they need to know. You know, that's very, very important thing to have happen, and we've been very lucky in that regard.
Thank you.
I think unless anyone has any burning urgent questions, we've just headed past 2 o'clock. So thank you very, very much everyone for joining. I've popped our email address on, so do please get in touch if you've got any further questions. But hopefully today's session has been informative and you've got some questions and answers to ponder over Christmas and the new year.
Thank you for your time, everyone.
Thanks very much. Cheers. Bye-bye.